we are doing chapter 10, right? Chapter 10, what was? Yes. Chapter 10, we still have few more slides. We'll finish it, then we will have some problem solving. Chapter 10. We are doing foreign financial statement, conversion, 2 methods we learned. Okay. We are good. We are good. Okay, how are you doing? Everyone is good? It's cold, chilly, Eri, how are you?
Cold and chilly.
Ooh, yeah, I know that. I know that. So, Sophia, what we are learning? We are learning chapter 10, foreign financial statement conversion. Will, how are you? Okay, when? Let's see who can remember what we are learning. Last class we learned 2 methods. Last class we learned 2 methods how you can convert your foreign subsidiaries financial statement when?
Is it temporal and current rate?
Very good. Temporal method and the current rate method, right? Sounds good? Sounds familiar? We'll watch the lecture, we'll catch up, right? Okay. So, and it depends what your subsidiary is using as a functional currency, right? You know what will be my next question. If your subsidiary uses their local currency, which is a foreign currency to us, what method we will be using, Sophia? Current rate, everyone look at the table we did last class, right, Matteo? If your subsidiary is in China, they are using yen. What method you gonna use? The current rate. And the process is called? You can see your notes. The process is called? Translation, right, Jordan? How about if your subsidiary is using the US dollar? What method are we gonna use and the process is called? Remeasurement and the method? Yes, the process is temporal. Very good. If you use the temporal method, you will end up with some gain or loss. Where are you going to show that gain or loss? I'm using the temporal method.
Income statement.
Income statement? You get my question. I'm following the temporal method. It's called remeasurement because they are already using US dollar. I'm still remeasuring, following the temporal column, right? And the gain or loss will be on our income statement. How about the current rate method? The gain or loss will be on our 2 places we can show our gain or losses. One is the income statement, another we can just skip income statement, bypass the income statement and directly show it on the balance sheet. Right, Jerry? If you are following the current trade method, you can show it on your balance sheet. We saw some slides, right? Last class, we saw some example. Today will solve some problems and then we'll go back to the slides. Very quick and short problems. You guys will do it. You are very smart. Don't be lazy. You have the cheat note. Use your cheat note. Talk to your friends. And let's see if we can do it. So, we will do very easy problem here. Let me pass the problem 10 and 11. 10 and 11, Matthew, where is Jake? You can do it in a group, you can sit together. So, you need to use your cheat note or the table that I gave you. You don't need to memorize it. which is very good. But you need to learn how to apply it. Let's see. We're gonna use this table and those who were absent last class. I have some copies. It's very dark. I hope you can read it better. Or it's on the slides too. Right. So we will do problem number 10 and 11. Let's read the problem and let's see if I have some extra cheat note. Who are not here? And this you need one?
Yes.
You have one? You need one? So we're gonna use this cheat note. You don't need to memorize it, but let's do problem 10 and 11. You will do it. A cash corporation subsidiary buys marketable securities and inventory, two items, marketable securities and inventory. And these are all in one. It pays both items on June 1st. Okay, they bought on credit and then they paid it later. They still have some inventory, ending inventory. Ending inventory is carried at cost under the lower of cost or net realizable rule. These are the exchange rates. Now, number 10 is saying that your subsidiary's functional currency is won. What will be the converted number? First, you have to decide if they are using won, then what method. Then you have this cheat note. Either you're going to use the temporal rate method or you're going to use the current rate method. And two items you have to convert. I'm sorry, it's very dirty here. One is inventory and marketable security. So this is marketable security, the second one. And then another item is inventory. Now, it's not clear, but if you read it on your slide, inventory could be recorded at market or at cost. Have you heard the term LCM? I probably have written this one. Let's revisit it. LCM, lower of market or cost. Right. So when you have ending inventory, this is not a problem, but I'm just giving you some idea that we have to revisit. So there is one rule that we follow. It's because of accounting conservatism. When you have to record ending inventory, we follow the LCM rules. Have you ever heard it? Did I write it last class or sometime? Never? LCM means what? Lower of? Yes. How do you know it? Yes, I think I discussed a little bit. We didn't do any problem. LCM means lower of cost or market. At the end of the year, if you see that your market value of the inventory is going down, then you also need to reduce the ending inventory value on your balance sheet. And we have to write off the inventory because we are conservative. We have to always show lower assets value, lower income values. Right. So ending inventory, when you buy it, you record it as per the purchase price, but at the end of the year, we see market price went down. We always pick the lower out of these two. Then if market price is lower, we have to reduce the inventory value. If the market price is higher, that's fine. We will always record as per the lowest one, and cost is usually the lower one. Now, we call it lower of cost or market. In IFRS, they call it lower of cost or net realizable value. And they have a little different term, but the concept is the same. Whatever is the lower, you have to use it. Now, here, problems may mention it how they are recording their inventory. In this problem, they mention that they are a foreign subsidiary, right? They are using one, maybe some Asian country. They are following inventories at cost under the lower of cost or net realizable rules. Now, why I need to know whether inventory is recorded at cost or net realizable / market value? Because if you follow the temporal column, look at the temporal column. Temporal column is little complicated. This is inventory at market, right? Please see it on your paper. It's inventory at market, and then you have inventory at cost. Current rate is fine. We always use the current rate. But if your inventory, ending inventory on your balance sheet is reported as per the market value, you will use the current rate for conversion under the temporal method. If your inventory is recorded as per the cost value under the temporal method, you're going to use the historical rate. What do you mean by historical rate? Historical rate means the day you purchase the inventory. Current rate means the day you are preparing your statements, which is usually December 31st or the last day of your fiscal year. So most problems will mention it, especially if it's a temporal method. It will mention that inventory is at cost or market. But if nothing is mentioned, about inventory, how they valued it on their balance sheet, the ending inventory, if nothing is mentioned, we assume that inventory is at cost. Because for temporal method, it's important. We assume that inventory is at cost, because usually cost is the lower. We assume they didn't have any write-off. Now, I gave you these hints because for the temporal method, you need to know inventory is at cost. Now, let's do it. You can do it. Use the cheat note. Use your brain. Two people can work together. Eddie, I have a problem set. We are doing it now. You can sit together and do it with someone else. Okay? One. You need one? Matt? Is there any extra? Let's see. Are those extra? Yes. Okay. Okay. So invested in
Inventory is
okay, let's see. Eddie, you want to sit here and do it together? Matt, you are here last class, right? Okay, you two can do together. When that's right. Mark, Will. Go closer. Go closer.
Yeah. Sorry.
Otherwise, I'll just do it. It will just be quiet. If you can do it, you can help you. At yours. You can come closer. They can help you. Okay? You want to join here? You have this bumper skip.
Yes, sorry.
Bumper cut here. Come on, come closer and do it together. Right here. You want to come here? Do it. You already did it? Marisa already did it. Go. Do it together, Jordan, Marisa, Sophia. Check your number. Hunter, I know you're good. Once you are done, you can just take the number. Or, Will.
I'm trying to, which one are we doing? Is it
We are doing problem 10 and 11. Let's do 10 first. We have to convert two items. Two items. I have a foreign subsidiary. Two items. One is marketable securities, another is inventory. For the number 110, they are using one. You have the cheat note. What method you will be using? And then you can use this table. Okay. First decide they are using one. So this table will help you what method. If you know the method, then you look at this cheat table. and what rate you have to use. Everything is given, all open notes. You just need to figure out what day. Current rate means what day I have to look. Historical rate means what day I have to look. At least few people solve it together, then yes, do it together, please. Will, you're trying?
Yeah, I'm using
The beat on one.
Doing it. So what method you use? First tell me the method. They are using what? You see the cheat table thing they have.
the current rate.
The current rate method, what is the cheat note? The current rate is easy, right? All. Current rate. Current rate means which day you have to look at. Yes, you got it. Very good. 10 is, I think, D, right? 10, 10. You got C? I'm not sure. 10. What do you get? 10.
Oh, no, it would be D.
What do you get? Matthew, 10. 10. What did you get? D or C?
D.
Eddie, you have to do it. Eddie and you will do it together.
Okay, yeah.
Yes, please, please. You guys are super smart. You just don't want to use your brain. Matthew, you did it?
Yeah,
You got it? D? Okay. Okay. Now C, number 11, you keep trying. I'll help you. What do you mean by historical rate? Which day you use? Because you went to
So Ronan is the 10
10 is, you said 10 is the amount of historical.
Well, it's historical.
I thought it was C.
I think it's April.
First it said, why is it on April? Then I get it.
Yes, they first started on April 1st.
Yeah, so you get the
Which is the
26.
Right. This is for the temporal method.
Oh,
Now
right,
look at that.
Oh, right, zero.
What method? What method? 10 is what method? Now you have the table, 10 is what method? 10.
That would make it.
They have one. Yes, what method?
Yeah,
Current
still
or
using
temporal?
December 31st.
Yeah.
Can you post that
Which one?
with the red writing?
Red writing?
Yeah.
Okay.
Can you post that?
Oh, yeah, I will scan it. I forgot. I will post this to Blackboard, you mean? Okay, I will. Yep.
Thank you.
Yeah. Okay, most of you did it. Who can help me? Who can help me, please? Who can help me? Okay, Dan raises first. Okay, Dan, go ahead. So, first tell me what is the functional currency for number 10?
Number 11?
I mean 10. Let's do 10 first. I know most of you got it, but
Okay, the one,
the one.
which is a foreign currency.
Okay,
And that would make it the.
right. Met R and when. This is the foreign currency. So what method?
The card rate.
The current rate method. Right, Will? Current rate. And Mark, you have the cheat note. Current rate means what rate we gonna use?
Our current rate method
Yes.
for current.
Yeah, right? For both items, then we're gonna use current rate. Current rate means which day? Eddie, current rate means which day I have to look at?
December 31st.
Yes, December 31st, last day. Today, we assume we're gonna do consolidation, conversion, financial statement, everything on December 31st closing day. So you look at the December 31st rate, one won means 19 cents, right? Matthew, one won means 19 cents. So what is your answer? A, B, C, D. Both items you're gonna multiply by 19 cents.
D.
D, right? Very good. Most of you got it. Number 11, who can help? Number 11. Can help? 11. Yeah? Okay, let's see. Yes, Wayne, go ahead. You guys can check it. Yeah. What's the functional currency, Wayne?
The US dollar,
The US dollar. What method I have to use?
temporal.
the temporal one. Look at the temporal column. Temporal column, I have two items, marketable security and inventory. So, marketable security, we are using, this is marketable security, we are using the current rate, right? And for inventory, the problem mentioned, inventory is at cost or market or net realizable value.
It's at cost.
It has cost. So what rate we gonna use?
Historical.
Historical, very good. So we will be using historical rate. So now let's go back to this table. For inventory, historical rate means what day? The day they bought, the day they sold, the day they collected the money after selling, the day they paid for the inventory. They bought it, right when? The day you bought it, right, Matt? Or the day you bought it. What day? First time we recorded inventory, what day? January, April, June 1st, or December 31st? Yes, who can tell me? April 1st, right, Hunter? April 1st, because, it might be confusing for the first time. They say, April 1st, they bought it, both items. Then they paid it. Then they still have ending inventory. But you have to follow the day when they purchased it for the first time. So this is April 1st. So if you convert inventory, what will be the number? 100,000 owned. 16,000 LE. How about marketable securities? What rate are we gonna use? Marketable securities. Correct. Right? Right, Erin?
Yeah, I thought we were on inventory at cost.
Okay, inventory at cost is historical and current is December 31st for marketable securities. So, Erin, what is your answer?
C.
C, is that right, everyone? Is it difficult? Yes, Erin, please.
So will it always be the current rate method when you're talking about the foreign, like,
They are functional
does that make
terms.
sense?
Yeah.
And then it'll always be the temporal method when it's the US dollar?
Yes, this is the rule. Good. I'll post the table. Last class we wrote it. It's also on the slides, right? If their functional currency is their own currency, own or crown or pound, euro, it's a foreign currency, so it will be the current rate. When they are using US dollar, it will be the temporal. So you need to remember this table. It will not be given. Okay? Regulars? Now, can we do another quick problem? And this time problems are really tiny. So that means I will not have enough scope to give you partial credits. So you really need to do well on the problem solvings. Very quick, two more. Problem 6 and 7. Then we'll go back to the slides. 6 and 7. Again, make a team. Do it together. Do it together in a team. And let's see which team can solve first. You're good? Okay, let's do it. Let's do it, make a team. And let's see number 6 and 7. I think it's even easier. 6 and 7, we should do it first, but you can do it. Same table, same cheat note. We are doing number 6. Oh, 6, 7. That's why Eddie is laughing. I was doing the other day, poll. We did poll. You remember first day we did polling, like last question was, what? Why do we need a segment reporting? In other section, someone wrote 6, 7. And my Samuel said 6, 7. I start laughing. I have no idea what it means. I know it is. Okay, let's do it. Let's do it. Okay. Sorry. convert it. They already gave you the converted numbers under the current rate, under the historical rate. Right? You are good? This time you guys will help me. So Ari, you know now this time better. Foreign currency is a functional currency. What rate? US dollar is a functional currency. What method? Even they gave you the total. Any idea anyone did it? Eddie, you can try on, and Matt, you can match. Number 6, A, B, C, D. Anyone? Dandy. Okay, let me see. Okay.
Which method are we using?
That's what you need to decide. The cheat table. I know. At least you are not here. This is the cheat table we wrote last class. So depending on what is the functional currency, you have to pick the method. So number 6, the functional currency is a foreign currency. Right, Ari? So what method we're gonna use? The current rate. Number 7 is the US dollar. Number 7, temporal. I know the cheat table did not say land, patents, but you should know land means what? What type of asset land means? It doesn't say patents or land, but you should know. I'm sorry, it's very dark. Let's see here. It's better. It does not list land or patents, but you should know land means which one you have to look at it, right, Sophia? Land means which one, patents means which one, Jordan, land means? Asset, but what assets? I will. Land, property, equipment, right? And if it's patent, what asset I will look at? Intangibles, right, Marisa? Now you know it. Okay, so both of you got it, Matthew, ABCD. How many of you did it? Who can help me? Who can help me? Okay, let's at least take a chance and you guys check if he's right. He also raised his hand, and then I'll come back to you. You guys are doing great. Number 6. Okay, let me change it. Okay, Agnes, you tell me what is the functional currency for number 6?
Current rate method?
Yeah, the functional currency is a foreign currency, so you're gonna use the current rate method. Current rate method. Yes, go ahead.
And then all of them use current rates.
Yeah, current rate is very easy to remember. All assets and liabilities will be converted using the current rate. So, which day you picked? Oh, you don't need to pick a date because they already gave you converted numbers. So, what's the total of all these 4 types of assets?
430.
Right, it's easy. Even you don't need a calculator. So the answer is A. Right, Matthew, you got A? When you got A, Eddie, Ari? Right, okay. Mike H, you got A? Okay. Now who can help with number 7? Number 7. Anyone? Okay, Dan, go ahead.
You're using the temporal method because it's
US dollar, I'm using the temporal method. And then?
And then both accounts receivable current and long-term are expiring, so that would make you would add the 200,000 and 100,000.
Okay, so This is receivables. You see the first one, cash and receivables. We will be using the current one. And they have two types of receivables. Does not matter for temporal, current or long term. All receivables will be converted using the current rate.
You add that as 300,000,
300,000.
and then for land you added to use historical rates.
Land and patents, you use historical rates. So basically the day you purchased or you recorded, we don't know, but they gave you what will be the converted number using the historical rates.
And then you add the 300,000 plus 55,000, 85,000.
So you add here 55,000 and 85,000, and you got total
You got C 440,000.
440. Is that everyone got it? Good? Everyone is good? Eddie, you got it? Eddie? Eglis, you got it, right? So it's not complicated. This chapter is tiny problems. So make sure you answer everything on Connect. No partial credit because very tiny, right, Jordan? I don't have any scope to give you partial credit because it's so short. Journal entries either on Connect or by hand. Journal entries Connect combined it, all those big entries like payables, not payable. You can either combine it on Connect or break it out and write it. Both ways will be good. Let's go back to our slides. We skipped few slides intentionally last class. Few slides we are still behind. We will do that. So here, if I go back here, we all are familiar with this chart now. We all are familiar. Land means I have to look at here, intangible asset. There might be some conceptual true-false questions. The chart will be given, but you need to learn how to apply it. Then this one, we skipped it. There might be some conceptual questions, and I believe there is one homework questions. So, inventory. I just gave you the note. Inventory at cost or market, LCM. Inventory at cost or net realizable value. We always pick the lower one, right? Now, for inventory, if you follow the temporal method, and inventory is at cost. Try to follow what I'm saying. You are following the temporal method. Inventory is at cost. What rate you gonna use? Historical. Now, historical means the day you bought your inventory. We do not buy all inventory on one day, right? We may have different date. I bought inventory, one bulk, another shipment, another, right? And the dates are different. The rates are different. So, no matter you follow FIFO, LIFO, you have to check which bulk of inventory you have in your ending inventory or how much you purchased, what date. So that might be sometimes a little complicated. So there is a conceptual question or true-false question. You need to calculate the ending inventory. This is somewhere we will see it, somewhere in the slide we'll see that. Another concept here, ending retained earnings. If you look at the cheat note, who can tell me ending retained earnings, what rate we use? Ending retained earnings. Louder. Composite, because ending retained earnings we don't multiply by any rate. Not historical, not current. It's a result of all our other conversions. So it's called composite. So here we already saw one example. We'll continue. When you first start the business, you have beginning inventory 0, you have net income, you have dividend, you subtract that. This is how you will get your dollar inventory. So this first year's ending inventory will be my second year's beginning inventory. Again, second year's net income, whether you follow the temporal or current rate, will follow the chart. We'll convert dividends. By the way, dividends, what rate we use for conversion, temporal or current rate?
Historical.
Yes, stockholders' equity. What are the three parts of a stockholders' equity? Dividends. Hello, stay here with me. What are the three components of stockholders' equity?
Like common stock.
Common stock, Retained earnings, dividends. What is with common stock? Usually you will see.
Preferred stock.
Preferred stock, something else. Common stock and
Additional.
additional paid capital. So all components we use the historical rates. And this is how you get your composite retained earnings. Now last class, this is I already discussed that cost of goods sold and inventory, we have to calculate it using the appropriate historical rates because you may purchase inventory at different dates. So you have to follow this bulk of inventory. Let's go back, which day I bought, I'll follow that date, dates rates. Cost of goods sold. What is cost of goods sold? Who can remember? What is the cost of goods sold? Is it an expense, liabilities, assets?
Expense.
It's an expense. This is the cost related to the inventory. Either you manufactured or you are selling. Now, can you look at the chief notes? Do you see cost of goods sold, what rate we use? Is it on the chief note, cost of goods sold?
Historical.
Historical
Or average.
or average? So for the current rate, it's easy. All income statement things we use average, the average rate. But for the temporal method, we use the historical. Now, at least the problem is here. What do you mean by the historical date for the cost of goods sold? Is it the day when you bought inventory? Is it the day when you paid for the inventory? Is it the day when you sold inventory? Is it the day when you collected after selling the inventory?
What's the question?
The question is, if you follow the temporal method, everyone with me, if you follow the temporal method, I have to record the cost of goods sold as per the historical rate. My question is for the cost of goods sold for historical rate. What do you mean by that? Harry, you raise your hand, any confusion? No.
I just mean like, you said like, are you saying when we like accrue the expense for it? Or are you saying when we use it stuff? Or,
That's a good question. It's confusing. Let me write a note. Okay, everyone, please. Good question. So maybe you are thinking that way, at least that accrued means when I record it first time, no matter when I pay it, that day I have to use. Cost of goods sold is always related to your inventory. So another important date is when you purchased inventory. Let me write some notes. So when you purchase, let's do basic journal entries. I sometimes go back to SC 221, never mind. It's good to have your foundation, refresh your memory and connect it what we are learning. Let's do the basic journal entry. Record the purchase of inventory. The purchase of inventory. Right. So let's make some dates. Let's say it's March 1st. March 1st, you purchased inventory. What is the journal entry? Say $1,000. And it's on credit. You purchased inventory on March 1st. It's on credit. What is the journal entry?
that's payable.
Accounts payable will be on the what side? Credit, right? We have to pay it. Since it's a credit purchase, so I'll credit accounts payable. If I pay cash, I would write cash, but let's see. When I purchased on account, it's accounts payable, and debit, what? Inventory. Let's make some easy numbers. $1,000, $1,000. Then, say it's March 15. March 15. Now I paid to that guy or suppliers from whom I bought the inventory. What journal entry you do? 221. You paid for the inventory. Oh, nowadays we don't do journal entries, but you know.
Accounts payable, debit,
And?
you cash.
Very good. So I'm paying it. Look at the dates. Accounts payable, debit, and I pay cash. So maybe 1,000. 1,000. Now, if you need to convert inventory by using the historical rate, which day you will use? Yes. If you need to convert the inventory by using the historical rate, which date rates you will use? March 1st or March 15th, Marisa? March 1st, because this is the time when you first recorded inventory. That makes sense. Now, you sold the inventory, right? Mark, is it good? Basic entries, you sold the inventory. Record the sales of the inventory. So, when I sell it, I have to record two entries, if you remember. One is the sales revenue entries, another is the cost of goods sold entry. So, if I sell the inventory, let's say it's cash sales, and I sold it on April 1st. April 1st, what will be the journal entries? It's a cash sales. Sales revenue. Debit cash.
Credit inventory, or
Yeah, sometimes we mix it, right? I am talking only to record the sales revenues. Yes, Mark?
Cost of goods sold.
Cost of goods sold is another. Let me write it down. Oops, sorry. This entry is for the sales revenue. And I will write another entry for cost of goods sold. Sales revenues, I sold those inventory, of course, at a higher price. This is how I make profit. I sold my inventory. Credit will be what? Sales revenue entry. Huh? What? Sales revenues, right? That. Oh, sorry. Did you hear? I didn't hear it. You told me. Sales revenues. You know, sometimes it's very easy, right? Now, what you guys said, Mark and Eglis and Ellie, we also need to record both on. We do the both entries. April 1st. We also need to record cost of goods sold. So, we debit cost of goods sold, which is an expense, and my inventory is gone. We credit inventory. Now, who can tell me? This is the one bulk of inventory, same inventory. What number I'm going to write here? 1,000, right? This is exactly the inventory value in my warehouse, and I paid it, inventory, either I manufactured it or cost of goods sold, cost of sales, whatever. Now, my gross margin is, we already know, gross profit. What? How much? 500. Now, look at that. Here, this cost of goods sold is attached with the inventory. Although, April 1st is the day when I'm recording it, but the cost of goods sold is attached with the inventory. We record the number following the inventory number. So, for the cost of goods sold, historical date or historical rate will be the day when we purchase the inventory. If I say, okay, I'm doing the temporal method is complicated. It says, convert the cost of goods sold following the historical rate. Now, what do you mean by historical rate? It seems like I recorded it on April 1st. No, it is attached with the inventory. So, for cost of goods sold, just like the inventory, the historical rate will be the day when we bought the inventory, which is March 1st. I'll write some more notes. You know why I'm writing it? Because I know these are very tiny things. Still, you'll make mistakes. Either conceptual questions or little numbers. So let's write the note for inventory, because temporal, these are all for temporal. Current is easier. Temporal method, right? For inventory, historical rate means the day you purchased it. The day you purchased it. Please write something, otherwise you forget you purchased it. For cost of goods sold, all are for temporal. For cost of goods sold, goods sold is the same. Is the same. Historical rate means not when you sold the inventory. Historical rate for the cost of goods sold means the day, use the day when you purchase the inventory, because cost of goods sold and inventory are the same. So it's the same way we treat the historical day. The day when you purchase the inventory. Now for the current rate method, we don't need to worry about it. Everything is used by the average rate. Is it good, this one? So if you can remember it, then we will solve another problems, and we have to finish some slides first. Right, so let's go back to the slides, and then we will do applying this concept, the note you just took. We'll do some more problems. So that's what it says. Cost of goods sold for the temporal method, it's difficult. Now, Matt, you are doing it, all are with me. My question is, I'm following the temporal method. I have to convert the cost of goods sold. And for the temporal method, cost of goods sold will be converted by using the historical rate. What date's rate I'll use? The day I purchased the inventory, the day I sold the inventory, the day I recorded the cost of goods sold. The day you purchased it. I'm not talking about inventory, I'm talking about the cost of goods sold. We will follow the same. Historical means the day we purchase. Now it says that, we purchase inventory, not all inventory on one day. You have some day you purchase inventory. Some inventories you purchased last year. Some inventory you purchased in the middle of the year. Some inventory may be in September or December. So what you need to do, you have to decompose the inventory when you purchased it and match with the dates, because I need to know both for the inventory and the cost of goods sold, historical rates should be matched with the day we purchased the inventory. So this is just a conceptual question, and there will be no number-based calculation during the exam, but the conversion part will be here. We'll solve one problem. This slide we already saw last class. Who can remember which method will bring more fluctuations on my balance sheet, and we'll have more currency risk? Current rate, why is current rate?
Because it goes by the market.
Yeah, every year it changes, right? Every year the numbers change, December 31st, every year, so it will have more fluctuations. Which method is more matched with our pure GAAP accounting principles? Historical cost approach we follow. Long-term assets, we record it as per the purchase price or book value. Which method? The temporal, right? Yeah, historical rate matched with our basic GAAP historical cost concept. I'm telling these things because you will have some conceptual question. We already did this, I'll not repeat it. And last class, where we stopped, we use the current rate method. Current rate is the easiest one. First, what we did, we converted our, here, this is just some notes, this is some bullet points from the chart that you will be given, but we did this one. You have a Swiss subsidiary, Switzerland. This is their Swiss franc numbers. Then, I'm following the current rate method. Who can tell me? If I want to convert my income statement items, I'm doing the current rate method. What rate we use? I'm doing the current rate method. I have to convert the income statement items. Current rate is very easy. What? Average. Everything multiplied by the average number, right? So it's very easy. So it's given. Average 2024, 1 Swiss franc is $5. Look at that. This is their income statement. So everything I multiplied the same rate. So my dollar income statement net income is 493, right? Is it good? We stopped somewhere here. So what we did, we copied and pasted that dollar converted income statement here. And then it's the first year, no beginning retained earnings, we added our net income, we paid dividend. Dividend, we follow what rate? Dividend. Historical. That means when you declare the dividend, not you paid. First we record it, right? Dividends debit. Dividend itself is a contra retained earnings and dividend payable. And then maybe after 2 weeks you paid the dividend. You remove dividend payable, cash is gone. To make it simple, we can combine it. Dividends, dividend, and cash. But now we declare dividend when? October 1st. So this is the historical rate. We converted it. What is my ending retained earnings in dollar? Ending retained earnings? 333, right? So now I'm converting my balance sheet. So for balance sheet conversion, what we're gonna do? We will be using different rate here only for the stockholders' equity. But all other, since it's the current rate method, all other assets and liabilities will be converted by using the current rate. And liabilities are current rate, stockholders' equity is the historical rate, retained earnings, Dan just mentioned 333K, and I am posted it here, copy and paste. Now, this balance sheet will not be balanced because it's a simple algebra. It's a balanced balance sheet, but I'm multiplying by here, this side, 1 multiplier. This side I have different multiplier, and this number is copied and pasted, so it will not be balanced. But we have to balance it. So we will always make this total liabilities and stockholders' equity equal to total assets. And to balance it, you have to plug in a number. If you plug in a positive number, it's a gain. If you have to plug a negative number, it's a loss. So my last question, before I move the 3 more slides. If you follow the current rate method, the table, the gain or loss will be reported on which part of the financial statement? You are following the current rate method, the gain or loss, the table you drew last class. You are following the current rate method. You ended up with the gain or loss. That will be on where? The balance sheet. This is what exactly we saw. Now, tell me the next question. If you follow the temporal method, the gain or loss, we show it where? Income statement. So the end result, the last thing, the difference we have to plug in the income statement. And that's why for the temporal method, we will do backward conversion. Backward means first we'll convert the balance sheet, then we convert our statement of retained earnings, then we convert our income statement. And whatever I need to match the numbers will be my gain or loss. And let's see one example. Temporal is complicated, but you have the cheat sheet. Let's convert it. First, we'll convert the balance sheet. So, temporal, these are some bullet points you already know. That temporal, we call it remeasurement. Gain or loss will be on the income statement. Now, you have this cheat sheet. You don't need this long-term assets. We use the historical, short-term, liabilities, current rate. So now, let's do the balance sheet conversion first. Here, please engage with these concepts because you don't need to convert the entire balance sheet, but there might be some conceptual questions. This is my Swiss franc. Balanced balance sheet. I'm following the temporal method. Temporal is little crazy, messy. So, short-term assets, I'm using the current rate. Long-term assets, plant, property, equipment, amortization, intangibles, I'm using the historical rate. This is my 1.744 is my total assets in dollar value once I converted the asset sides. Then I'm converting the liability sides. Liabilities we use, no matter it's a short-term or long-term liabilities, we use the current rate. Common stock additional paid in capital, we use the historical rate. But I'm converting the balance sheet first, so I don't have any retained earning numbers. Retained earnings, I do not use any red. What I'm gonna do, I will forcefully balance the balance sheet. I will plug in such a retained earning numbers in dollar that total liabilities and stockholders' equity will be equal to the total assets. So to balance the balance sheet, I have to plug in this $309.8 thousand. This plugged in number will match my dollar balance sheet. So these number will be used as dollar ending retained earnings. Make sense? I'm doing the balance sheet first. And I converted everything except the retained earnings. This part, different multiplier. This part, different multiplier. Mathematically, up to this is your all total assets. Liabilities, stockholders' equity will not be matched. Retained earning is still missing. So to match it, I'll plug in the retained earning. This is my artificially created or composite dollar retained earning, 309. So remember that, $309.8 thousand. So now let's do the retained earning conversion. And here, this is my artificially plugged in 309.8 retained earnings. So I'm gonna use the same dollar as the ending retained earnings. Then you have your dividend. Then we will do backward calculation. If it is my ending retained earnings, simple algebra. Please, if it is my ending retained earnings and you have dividend, what would be your net income? You have to add these two, right? Because say for example, my beginning retained earning is 0. We add net income, we subtract dividend. So this part is nothing but including dividend. So if you add these two, you will get dollar net income. Make sense? Now, let's take this dollar net income, $470,300. This is my dollar net income to balance with this ending retained earning. Copy this one, 470.3, and then paste it as dollar net income. I'll first do this. I'm not yet done with my income statement conversions. So I plugged it in. It's my imposed or composite from the composite retained earnings dollar net income. Now, you convert all the items. Sales, we always use the average rate. The idea is that sales we do every day. So just use the yearly average rate. Cost of goods sold, I have different bulk. I purchased inventory on different dates. So I calculated based on each bulk's historical date. And then some expenses, I use the average rate. Some expenses, I use the historical rate. After doing everything, you will see that if you do these dollar numbers, your net income is not exactly equal to 470.30. Right, because this is artificially created by using the balance sheet numbers and balancing the ending retained earnings. Here I am using different multipliers, but we will say that this is my net income. So to keep your net income number like 470.3, I have to plug in some numbers here. If I plug in a positive number, it's a gain. If I plug in a negative number, it's a loss. Here, if you calculate net income in dollar value up to this, forget about this part, you calculated net income up to this, that number is 47,000 higher than your composite number. So we have to subtract 47,000 here. So it's a loss. And this is how, under the temporal method, you will show your gain or loss on your income statement. Not difficult, but I'm just giving you some concept. There might be some quick questions. So we will do one more problem, and this is your last slide. It says that sometimes you will see that just because of the different method, you will end up with different ratios, right? Say for example, one subsidiary is using the current rate, another is using the temporal rate, and you follow the chart and you end up with different numbers, right? The same subsidiary, that Swiss franc, if you do the ratio analysis, you will have different numbers. So that is one of the variations all companies have to face. Now, what time is it? We have to do one more problem before we go home. And then here, this comparison, I already discussed it, that current rate you have to face more fluctuation risks. On the other hand, temporal is very consistent. If you have a high inflationary economy, what rate we gonna use? I told you last class, high inflationary economy, what rate? Temporal, because don't use current rate, it will be more, very inflated. Last problem, 8 and 9, let's do it. 8 and 9. So, the other page might have some information here. Navarro Incorporation's reporting currency is US dollar. This is the parent's currency. Okay, don't be confused. This is the parent's currency. They have a subsidiary in Argentina. Argentina is also using the US dollar. What method I have to use? Argentina is using the subsidiary, is using the US dollar. What method I have to use? Temporal. Oh, temporal is very complicated. But we'll do it. Remember, this is problem 8 and 9. We'll use the temporal method. But it's not difficult calculation, but remembering all the concepts. Thank you, Ellie. Let's do it. I know they are using US dollar, so it's the temporal method. Now, here, they have pesos, right? They sold the pesos. They purchased on November 1st. Sorry, this line is important. On November 1st, they purchased inventory. It's split into 2 pages, but you have both pages. November 1st, they acquired inventory. And then, 100,000 peso, they sold inventory on January 17, 130K peso. They paid for the inventory on January 31st. This is what you saw a couple of minutes ago, different dates for doing the journal entries. But now, these are the exchange rate. What happened in between? They closed their book on December 31st. Now, what amount should Navarro's consolidated balance sheet report for the inventory? Remember, they purchased inventory on November 1st. Purchased inventory on November 1st. So, this is the information from the other page. And this is 100,000 pesos. December 31st, they are closing their book. The inventory is not sold yet. They have that ending inventory. And I know it's temporal method. Did the problem say anywhere whether they follow inventory at cost or inventory at market or inventory at net realizable value? Inventory at cost. Okay, Eglis. Current means what? Current rate? Do I need to?
I thought it was inventory on market.
Yeah, so the assumption is that if nothing is mentioned, we'll assume inventory is at cost. This is the normal norm. Cost price is always lower. We purchase the inventory, we always show it at part the cost price. So please, if you forget it, remember nothing is mentioned, we're gonna assume that inventory is at cost. So if inventory is at cost, Eglis, what rate we use for the temporal method? Historical. Now you have several dates. So what day we mean for the historical date for the inventory?
November 1st.
November 1st. Is it clear, everyone? Is it clear? Man, when is it clear? Eddie, when did you buy the inventory? Eddie, when did you buy the inventory? almost done, last question. We bought it on November 1st, okay? It's very bad handwriting. This is the purchased inventory on November 1st. And we are doing the temporal method. The assumption is that inventory is at cost, so inventory will be converted by the historical date. So we have to follow November 1st rate. Is it good? Looks confused? You are good? Okay, fine. Well, November 1st rate. So if you need to convert 100,000 peso inventory, what will be the dollar value?
Be 16 cents per.
Yeah, 16 cents multiplied by 100,000, which is, what is your answer?
16,000.
Very good. Number 8, you have to do the inventory conversion. Inventory is at cost, temporal method, which means you have to use the historical rate. Historical rate means the day you purchased inventory. Please don't lose any points. There is no partial credits because this is so tiny problem. Still, I will feel bad if I say you lose points because these exact problems will be on the exams. Number 9. So, this is the last year's ending inventory, December 31st, 2023. 2024, you sold those inventory. You have all the dates. The day you sold the inventory is January 17. And when you sell the inventory, you have to record the sales revenues. You also need to record the cost of goods sold. I showed you the journal entries. Now, it's the temporal method. Who can help me? For the temporal method, cost of goods sold will be converted by using what rate? Mark.
Current.
Temporal method, look at the temporal column. Cost of goods sold will be converted by using the
Historical.
historical. Now my question is, Eric, historical. For the cost of goods sold, which day I have to look for its historical rate? The day I purchased, or the day I sold, or the day I paid, or the day I collected?
Day you sold or purchased it?
What do you think, Matt? When? What do you think, Eddie? You purchased it or sold it? Purchased it, right? Because cost of goods sold and inventory both are attached. So we're gonna use the same rate, November 1st rate, right? November 1st rate. So the cost of goods sold will be the same, 16,000 for both. We are using the historical rate. I'm writing all notes. Historical rate means the day you purchase it. The day you purchased inventory. Right. So here, 1 minute before we go, where is the note? I just did some journal entries. I think it's here. Yeah. This rate, that's what I wrote it here, Ari and Eddie. Look. When I'm doing the temporal method, both inventory and cost of goods sold, both are following the same number based on your cost. If it's market, it's different, but we'll follow the day when you purchase the inventory. Now, my question is here, okay, here, my question is, if you would follow the current rate method, what day you gonna use for 2023's ending inventory conversion? I just made it up, you can do it. You are following the current rate method. You have to convert the ending inventory on December 31st. What rate you gonna use?
117.
Yes, we're gonna use the current rate, which means December 31st, 2023's rate, right, Ellie? How about the cost of goods sold? You are doing the current rate method. You have to convert the cost of goods sold. What rate you gonna use? Average. They didn't mention the average rate, but you're gonna use 2024's average rate. Okay? This chapter is not difficult. What I want all of you guys, finish chapter 10 this weekend. Okay? Next week we have the last chapter before the exam, chapter 11. And here we learn how to convert the accounting methods from the IFRS to GAAP, GAAP to IFRS. Until you're good, you will finish chapter 8, 9, 10. Done. Right, it should be average. Right, it should be average. Really? Connect sometimes have wrong answer. You know, I discovered a couple of items. So can you go to the blackboard? I have published because you know sometimes Connect also has wrong answers, but yeah. Work number.
Thank you.
You're welcome.
Number 5.
Let's see. What's the explanation? It should be
This way.
average, right? Is the current rate, right? You sure it's the current rate?
Wait, this is for.
No, chapter 10, number 5. Oh, the question numbering might be different. Can you just read the question? Go a little up.
I could go on the.
From this, yes, the question numbers are different. Sorry, but let's see. It's only conceptual, right?
Oh, wait, no, this is. Oh,
Which one?
yeah.
Number 5. What is the question? What is to be the following balance sheet? Current rate method equipment is a long-term asset, PP and E. All will be using current rate. And depreciation.
It says.
Number 5. You can go to the solution here. Yeah. Okay. Thank you. Yeah, let's see, yeah. Or we are trying to match it since we are converting the long-term assets, but conceptually. Okay, yeah. Number 5 is the same number, right?
Yeah. It says A for 5.
A is what?
A is, this was the same one that I got, that I put, but I assumed it was B, current, and then average for year.
Right.
Maybe there's something in the question that I'm like, a small thing that I'm missing, is that at what rate should the following balance sheet and foreign statements be translated using the current rate method into US dollars?
Or maybe there is something in the book, I'll also check.
Because, yeah, because I thought, like, this was correct, but I thought this was the correct answer, because this was.
Right, that's what I think so.
Yeah.
You have e-book access, you can also check in the
Yeah.
e-book, right?
Yep.
So, yeah, sometimes the book might have some explanation, sometimes Connect has a couple of wrong answers, that's also I figured out. So let's go back to somewhere if it has some explanations about conversion, this one, or right after the main table, you know, the first table,
But this one.
no, the chart. You can go, yeah, you can go a little back, go up, before the illustration, go back, because they will break it up. Yes. Maybe just go page by page, that's better. Yeah, no, I just want to see this chart.
Okay.
Where is the chart?
Oh.
This chart, yeah, this chart on the table, in the textbook, and they might have